Hi, my name is George Hadger and welcome to this week's Video Insight. With the upcoming launch of an ASX-quoted version of the Montgomery Global Fund, it's worth exploring our approach to investing and the ownership mentality we adopt when looking at stocks. It's firstly worth recapping what a stock actually is. It simply represents a claim over a company's assets and earnings. This is how we view every stock we invest in, as a fractional interest in a business. And this ownership mentality frames our entire investing approach. We deeply analyse the underlying business of every stock we invest in as if we are going to make an offer for the entire business. Let's consider the hypothetical example of if you were thinking of buying, say, a local fish and chip shop. What would you want to know in order to be comfortable purchasing this business? At a minimum, you would want to see the financial accounts to get some sense of the historical sales and earnings. You might want to know what other businesses are in the area, the level of foot traffic the store experiences, and so on. Essentially, you want to gather information to gain comfort that there's a low chance that you will lose money when purchasing this business. Whether you're buying an entire business or a fractional interest in that business shouldn't change the level of due diligence with which you perform your analysis. However, in reality, this often is not the case, with many abandoning even a rudimentary analysis before piling into a stock, acting on hot tips and other questionable stock recommendations. The moment you stop analysing the fundamentals of a business, you venture into the realm of speculation rather than investing. Without having done a thorough analysis, you are blindly holding a business, hoping that it goes up. It might, or it might not. But any gains that you achieve are not due to skill, but rather are a product of luck. By failing to undertake a thorough analysis, a speculator also risks overreacting to company announcements and other business developments because they are unable to ascertain the value impact on the stock. They have no framework onto which they can array this new information and decide to what degree does it precipitate a change in value of the business. In short, they simply haven't done the necessary work to know how to interpret new information on a business, and this exposes the speculator to overreacting to immaterial information and capitulating at precisely the wrong time. The Montgomery Global team performs in-depth analysis on every stock in the portfolio, and we seek to cut through the noise. A cornerstone of our approach is to rigorously analyse the regulatory filings of companies and to build a valuation for every stock in the portfolio. We hope that through this disciplined approach that we are able to generate insights that over time continue to produce strong returns for clients. Thank you for listening, and as always, don't forget to follow us on Facebook and Twitter.